Live from the chicken wing capital of the world, Buffalo, New York. You're listening to the Childcare Bridge podcast, your source for the best tips, tools, and tactics on how to market and grow your childcare center, ensuring total domination. Total domination. This is the Childcare Bridge, and this is your host, Michael Tasner.
What if I could teach you to completely eliminate the need for ongoing bookkeeping and expensive tax planning by leveraging the power of AI? In today's episode of the Childcare Bridge, we're going to continue along this path of all things AI complementing, and in more cases, replacing things that are happening day in and day out at your center. What I've been finding after kind of getting your feedback from the last couple of weeks is a couple things. The first thing I've realized is that most childcare centers are leveraging zero AI. They're leveraging ChatGPT and having that kind of craft emails and things like that. But outside of things like that, they're really not leveraging AI. Now, the good news with that is that it presents a very, very large opportunity. The centers that are able to start to leverage AI within their curriculum, within their marketing, their hiring. Today, we're going to talk about accounting and finance. They're going to be light years ahead of all the other centers that are not using AI. And even in the weeks between these podcast episodes, AI just continues to grow. In the last week, Google unveiled a model called VO3. And this allows you to produce videos that essentially look like commercials that you would have invested tens of thousands of dollars, if not more. And you can do it all by using prompts, by typing in what you're looking for. And that literally just happened in the last week. The technology, as I have said over the last couple of weeks, is getting better and better. It's moving unlike anything I've ever seen. It is moving so incredibly fast. You have to get on the bandwagon now. So when we're looking at accounting, so we're going through the four fundamental areas in business. We're going through marketing, accounting, systems and strategy, and then team. We're going through these four. And we're looking at how could you deploy AI to either replace someone or something and or get better. So what I want you to start with today is to look at two completely different buckets. Bucket number one is going to be you listing out all of the manual things that are happening by way of your current bookkeeping, receipts, tax planning, tax mitigation, strategy, cash flow forecasting. I want you to list out all of that on one column and list each of those kind of on its own line. On the second side of the paper, I want you to list out what are the things that you know that you're supposed to be doing, but you're not. So, for example, maybe effectively tracking your miles. So if you're writing off a vehicle and you're going and picking kids up on a daily basis and having to run errands for the centers, you're supposed to be tracking miles. Maybe that's one thing. Maybe deploying something called Profit First, which we'll talk a little bit about today. Maybe it's doing tax strategy during the course of the year rather than waiting until the end of the year. I want all of those different things listed out so that you can start to kind of compare the two. Here are all the things that are taking up my time. But then on the other side, here are all of these things that I know I should be deploying. I should be testing out X. I should be reconciling within 5 days of the close of the month and then reviewing that data line by line. What that's going to show you, most likely, is that the stuff that you're doing is very manually driven, very kind of step by step, pretty basic stuff, but the stuff that you should be putting your time on is just not happening. When you have that list, now we can kind of get to work. And I'm going to talk through today just some of the basic ways that you can start to build and leverage AI to augment a lot of these things that you're doing. And quite frankly, I could make the case that your bookkeeper could become irrelevant. So to me, kind of ground zero, step one, is that you have to have a bookkeeping tool that is kind of AI first, AI driven, AI powered. So thankfully, QuickBooks has a lot of amazing AI built into it. Another tool is Xero, Xero. Both those tools have a lot of instant AI. Now, one of the things that you have to make sure is that you actually have the settings turned on to be able to leverage AI. So one of the things that I've realized, and I go in and I look at the financials, I look at the books for childcare centers, and I'm like, well, why are all of these things miscategorized? And there's a setting that you can turn on that it will then leverage AI to look at the name of the vendor and start to auto categorize it with pretty solid accuracy, typically 90%. So one of the things that you have to realize is that AI tools can have an extremely high level of accuracy. Now, the asterisk to this is that when they are trained the right way. If they're not trained the right way, if you're just loading things in and expecting a certain output with 100% accuracy, you're going to be, unfortunately, in for a little bit of an uphill battle. But the other thing to keep in mind is that when humans are putting this stuff in, they can't go through large amounts of data very rapidly. They will start to get fatigued. You're going to have to pay them benefits and time off, and they're typically prone to making errors anywhere between 1 and I've seen as high as 15%. That could mean missing a decimal point somewhere that hopefully then is caught during reconciliation, miscategorizing things. But one of the biggest areas that I want to talk about today is deductions. A lot of manual labor, they end up missing deductions because they don't really know what to look for. Or, and this is more of the case, you're leveraging personal credit cards or writing personal checks or paying cash for things that would actually be considered a business deduction. The way that I look at things basically is that every dollar that you fail to write off for a legitimate business expense, you're costing yourself roughly 30 cents in potential tax savings. So you might say, well, yeah, that was only $20 for, well, I bought these Post-it notes for the center and it was only, whatever, $20. Okay, fine. But in reality, to me, that's $6 that would be back in your pocket. Okay, fine. $6 is $6. But if that stuff is happening on a regular basis, that starts to compound, it starts to add up. You're typically talking at the very least hundreds of dollars, but usually when I've went in and audited the financials of a center, you're typically looking at thousands and thousands of dollars of missed deductions. So step one, after you have this list of all the different things that are being done, is you want to make sure that you have all the AI features turned on within your software tools. Step two is that I want to make sure that you download an app. Scanner Pro is the one that I use. There are several apps that you can then scan all of these different receipts that will then auto-categorize and make their way into QuickBooks. Now there's two tools that are, they're basic in nature and they're very easy to use, but for some reason they're not used very often by childcare centers. They're used more by marketing agencies like mine. And these tools are Make, so M-A-K-E, and another tool called Zapier. Now, what I love about these two tools is that you can easily program, without having to be a programmer, certain automation to occur. And these tools, think of them as a bridge. So they can be a bridge between something and QuickBooks. So for example, I can have it set up so that anything that goes to accounting at No Joke Marketing instantly forwards into QuickBooks. I have the connection between my email, Zapier, and QuickBooks, and it can instantly forward in. So if you have vendors that are sending invoices, so all that AP can literally be automatically migrated into QuickBooks like that. And it can be done once a day, once an hour, once a week, however you want it programmed. But what I'm looking for you to do is when you're going through and you're auditing that list of all of the manual things, I want you to start to write down some of the different tools that you're interacting with. So, as an example, if you're getting all these receipts on a regular basis, and then once a month you mail these receipts out to your bookkeeper, that's one of those easy wins where we can scan all the receipts and they can instantly then move into QuickBooks, thus eliminating you having to mail stuff and then someone else having to then manually look at the receipts, which then, again, that's where those error rates come in. The error rates are going to start to climb. One of my favorite things to do is once a month, I will take all of my personal credit cards. And I love to use credit cards. I like credit card points. So I do have a lot of credit cards. And I will load them in to a tool like ChatGPT or Gemini or Grok. And I've been putting stuff in here for quite a while. But even if this is your first time, you're going to give it a little bit of details and say, I'm going to load in my personal credit card expenses. I run a childcare center. What I'm looking for you to do is to go through this list and flag anything that you believe could be a business deduction that I should take a look at. So what I'm doing here, because what I find is often I will accidentally use a credit card that is a personal credit card versus a business card. It might flag things that are large expenses, but as you start to load in data month after month after month, as I've talked about in past episodes, the more data you load in, the better. So you might even want to load in all of your QuickBooks data. You might want to load in all the vendors that you already have inside of QuickBooks. So you're giving it a lot of data sets so that it can start to scan those. And it's going to find things that you used your personal credit card for that you shouldn't have. Now, the nice thing with things like that is that when you have something called an accountable plan, that's your way of kind of reconciling things for tax purposes. But all of those newfound deductions are then instantly being able to move into QuickBooks, being able to get written off and starting to save you money in real time. And that's all by you setting it up to where you're loading in the data. Now, if you want to take that a step further, you can leverage a tool like ChatGPT Operator to where it's logging into your American Express credit card, for example. So the difference with a tool like ChatGPT Operator is that it can actually execute different tasks. So it can be set up to log in once a week, download transactions from your personal credit cards. Now, the reason that it typically doesn't need to download and put things into QuickBooks is that automation already should be occurring. It should have a direct connection with your credit cards, so it's pulling all that stuff in. But if you're finding that you're manually putting in checks or you're logging into your bank and you're making copies of all the images of the checks, which is something that I used to do, you can have an AI bot or an AI agent, something like a ChatGPT Operator, logging in, and you're telling it what to do. You're going to go in, you're going to log in here. Here's the login information. I want you to look for all the checks. You're going to click on the checks. You're going to right click. You're going to download them, put them in this particular folder. Then you're going to drag the folder over to Google Drive, and you're going to put it in the respective month. Like that technology exists as we speak. So your baseline accounting work is to start with the simple stuff. Make sure that you have AI technology turned on within whatever bookkeeping software tool that you're using. From there, I want you to look through that list of all the things that you're having to do that are manual data entry. Anything that is manual and repetitive can be automated or at the very least augmented with artificial intelligence. Now, as you start to then load stuff into tools like ChatGPT, it's going to start to spot those deductions for you. It's going to say, hey, did you mean to deduct this? Tell me more about this. And you can reply back so that, well, it knows, yeah, you went to Topgolf, and while it was a very expensive thing, that's not considered travel or meals and entertainment, for example, unless it was out of town. But as you start to feed things, you could say, I'm in Buffalo, New York. If you see any transactions that are outside of Buffalo, I want you to let me know, because most likely I'm traveling for business and I forgot to write things off. So continue to feed it that information. I also would encourage you to be feeding in your old tax returns and literally having it go through and analyze your old tax returns to see, is there something that was missed? Here's the type of business that I have. So I'm a childcare center. Can you go through and see, did I miss things? And it might start to say, I don't see you claiming a home office deduction. Did you have that? Did you not write anything off for charity? I don't see an owner's salary on there. And it literally will start to give you ideas as if it were your accountant. And you can prompt it to say, act as if you are my accountant. Act as if you are an expert tax mitigation expert. Act as if you're triple checking to see if you can smoke out deductions that were missed. All of these basic things can be done literally today as we speak to literally start to replicate or replace a bookkeeper. Downloading transactions and importing things instantly, categorizing things appropriately, then actually going to the internet to double check to make sure all the categories were correct, giving you recommendations of other things that you should be writing off, double checking all of your financials from previous years to make sure that you're not missing any deductions. And as you start to build things out, it just will continue to get better and better and better to where you can come in and have the tool start to give you information back. How am I doing so far? Am I ready to deploy Profit First? Profit First is a operating methodology by way of you take profits first. I've done a couple of podcast episodes on this. And it can start to tell you, are you on track, off track, based on everything that you're loading in, based on data that's pouring in. And you can literally have it start to move things for you. All of that automation exists. The AI tools can be set up by way of workflows where money is being moved on a regular basis. Any money that comes into this account can get swept into that account. It can move the profit percentage instantly for you. It can move money to a tax account, and then that can pay taxes automatically, all on autopilot. Start at the basic levels, and then we'll start to work our ways up with some of the more advanced AI forecasting by way of cash flow and really getting into some more advanced tax planning. Start small, start to feed it some information, and it'll be more and more helpful to you and your centers. Have a great rest of your day. Get out there, take some action. Michael Tazer signing off. Good morning, good afternoon, and good night. I'll see you next week.